keep on
No.
the earnings talk with bank earnings. Speaking of banks, Bank of America reported earnings, obviously, yesterday. CEO said nothing that customers continue to spend freely and that the U.S. consumer is healthy. He also made sure to mention that balances remained higher than when the pandemic started in 2020. So, Garrett, is everything perfectly fine, or does the CEO have his head in the clouds about what's happening around him?
I don't think he has the head in his clouds around anything that's happening. I mean, the basis here is that real interest rates in the economy are -5%. So take the CPI to subtract what the Fed funds rate is, or other way around. Forgive me, Fed funds rate minus CPI, that gets you -5%. There was a reason why a couple of years ago, all those central banks in Europe went to negative interest rates to spur spending, to get consumers to pull their money out of the bank and spend. And here we sit with a bunch of people in the Fed looking around saying, we don't know why everybody's spending so much money. This is incredible. It's because we have negative interest rates. And that's going to continue because people recognize that inflation remains very, very strong. It is entrenched now in the service industries. Everything continues to move higher. Food continues to be a problem. So long as that negative interest rate exists, I'm going to anticipate that consumers are going to spend at a above average pace.
I mean, Garrett, it doesn't make more sense than that, giving us some clarity here. Shaw, let's add to the mix here. Bank of America, is it in for a rude awakening about what's really going on with the U.S. consumer?
Yeah, I think that the banks are in for a rude awakening, especially on their credit card lending. Everybody thinks that the consumer's in great shape because everybody's referring back to the 2020 savings rate when it was north of 30%. And that's savings as a percentage of disposable income. That was 2020. It was March of 2020 and April. That number came out in April. A year later, it was 20%. You know what it is as of last month? It's 3.5%. So consumers spending what they are putting it on their credit cards. That's going to come back to haunt them with rising rates. You know, they're going to start missing payments when we fall into a recession. And next thing you know, that triggers up the interest rate they got to pay. Right now it's all fine and maybe look good through the holiday spending season, but it's going to catch up to the U.S. consumers, and that's going to catch up to the banks.
Yikes. Talk about some bad spending. Listen to this. Paul Pelosi. Hoo-hoo. Garrett, you're always tracking what insiders are doing with their